Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Ackerman, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. Welcome back to the show, Rick.
Thanks, Jim. Always a pleasure to connect with your huge audience.
Rick, now, before this big meltdown happened with the markets, we heard, the Fed has our back. This kind of thing can't happen again. We've only had 18 recessions since the Fed was invented, but surely we can't have another major market meltdown because the Fed has, quote, our backs. Does the Fed have your back, and will the meltdown continue?
Yeah, sure. You know, it's a wonder that those 18 recessions haven't instructed us as to the Fed's ultimate power to influence the economy and the markets. And you see that the effect now of easing is it's more or less spent in about 32 minutes in some sort of short squeeze rally. But this time the Fed is bucking some very considerable headwinds simply because loosening before in a bull market enjoyed the benefits of high levels of high money velocity. In other words, people take their money and I think they're going to put it into something, anything. All assets are rising, so just put it in stocks, real estate, and you get that money multiplier effect. But coronavirus has reversed the psychology there so that people aren't quite so sure that wherever their money is parked, it's going to grow and grow and grow. So that's why I think that the stimulus, this current round of stimulus, even as it goes down to zero, will have zero effect.
Now, of course, the coronavirus gets blamed for this drop in the markets, yet other people were telling me that their technical analysis was telling them that this drop was about to happen anyway. Your view on that?
Yeah, I think that's an interesting thing to speculate on, and it certainly goes with the story that I've been putting out for the last 30 years, which is that the stock market really colors the news rather than the other way around. The stock market doesn't make the news doesn't make the stock market go up. The stock market does its thing up or down, and depending whether it's going up or down, it colors our perception of the news. So you'll notice that if the market were to go up for a couple of days here, that you would start reading all the coronavirus stories would shift toward, hey, it's not spreading nearly as quickly as it was, and this and that. So the market absolutely determines the nature of these stories that are coming out on a coronavirus. So, and I do believe, as I think Bob Hoy was pointing out in his latest, that this collapse was coming anyway, cyclically.
The U.S. dollar, how's it doing? Because the Canadian dollar is plummeting as fast as the markets.
Doing pretty good today. I've been a dollar bull forever, and it certainly as long as we've been talking, and my long-term target on the dollar index has been up around 120, where the dollar was topping at the beginning of the millennium. So that leaves a lot of room. The dollar has come off a recent high that missed a rally target of mine that we may have talked about at 100.01. We got within a dime of that and dropped back to, I think, 94 and change. And now I think the dollar has based and is ready for another leg up.
Going back to the markets and stimulus, as you said, if low interest rates are the solution to everything, how come Japan and Europe haven't been booming where they have zero or negative interest rates?
Well, I guess hope springs eternal, and you could make the case somewhat that in the U.S., when you get stimulus, the Americans are so they're basically they're world-class shoppers in this world, so that any stimulus goes instantly into shopping binges, and we have a way in this country of actualizing stimulus more readily, more efficiently than, let's say, the tight-fisted consumers of Europe. So, but putting that aside, I just don't think we're going to get much of a pop, not even in housing, which we may have discussed last time we talked, but we'll get something in the way of a refi boost, but we've already been through a pretty heavy refi cycle, and I don't think we're going to have nearly that much refinancing done since everybody did their refinancing in the last little wave of it. So household liquidity could improve somewhat overall, but not enough to trigger off a binge. And of course, even the stimulus takes a deflationary skew if homeowners decide, well, now that I've reduced my monthly mortgage payment by $300, I'm going to start putting it into my son or daughter's student loan. So I think we're in a time really when loan paybacks are going to take precedence over shopping binges, and that's another reason why the stimulus will be maybe counterproductive.
We'll have more with Rick Ackerman right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Rick Ackerman. Rick, how long do you think it's going to take before we see a huge wave of layoffs connected to the market downturn?
I'm not sure we're going to see a wave. The hiring was never what you call, it happened at a certain level, I guess. A lot of it was counter wiper, burger flipper, and it's only been within the last month, I guess, we've seen that most of the employers in that sector are still struggling to find help. So I don't think that trend is going to reverse precipitously, although it's predictable that even now it's weakening and kind of turning the other way. The restaurants in particular, where a lot of that hiring took place, are very vulnerable in this pandemic, and I can see it pretty clearly. Even I live in a Florida compound, and they have a dining room. They've just sort of changed the rules drastically. There's going to be no salad bar, and all food handling instead of serving yourself at the cutting station where they make they slice off roast beef or turkey or whatever. Usually you could sort of get your own side dishes, but even there, it will only be employees now who touch utensils that touch food, and they'll be wearing surgical gloves. So when you put that out there in the retail sector to some of these places that have salad buffets and Hofbrau's with some buffet arrangement, it's really going to hit the restaurants hard, and we haven't seen the worst of that by any means.
Yeah, the businesses where there's personal contact, hairdressers, nail salons, they're going to be hit hard, aren't they?
Yeah, they will, and it's going to take a while. Even if by April we're reading that the coronavirus is just kind of dying out, it would probably take another couple months before people get over their fears so completely that we return to normal contact, really. Handshakes instead of elbow bumps and things like that.
It's funny, though, we still have to find some kind of a substitute for the handshake. What about societies where they didn't shake hands, they still have the coronavirus?
I'm not sure I can bring this up on a family-oriented station as you are, but the Romans had a very different tradition of what to grab and shake in Roman times. But I don't know whether the habit's going to change. I think the handshake is I hate to say it's on its way out, but it's experiences like this coronavirus that put it in jeopardy.
These runs on toilet paper and hand sanitizer, panic or prudent?
I think somewhere in between. If an entrepreneur were to offer, and it's maybe getting a little late in the game for this, but if someone were to get out there on Amazon with a $90 weekly food ration, all canned stuff and dry stuff, they could make a fortune. So, but I think we're sort of in the middle of that.
We'll have more with Rick Ackerman right after this.
Ackerman Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Ackerman's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at ackermanresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, crude oil has taken a huge fall. Why is that, and what's your prediction for it in the near future?
Well, crude is in a perfect storm. It's been weak for some time now, really, because the swing buyer there, the big marginal user, China, has been experiencing an economic slowdown. So with that as kind of for starters, we've got the Russians at war right now with OPEC as far as reducing supply. I don't think you can possibly reduce supply enough to compensate for falling demand. So you really have a very deflationary trend in the oil patch, and it's unfortunate for the global financial system because crude oil and energy resources have been hawked up to the eyeballs in a financial system that, for one, has created a quadrillion-dollar derivatives market. And you can bet that a lot of those quadrillion dollars are pledged ultimately to oil or natural gas collateral. So that's why even over the last year, whenever crude oil was rising, it was treated in the press as kind of a good thing. There was a time when we were thinking, oh, now they're going to start raising gas prices again. But I think that there was implicitly this knowledge that the banksters, the banking system, needed strong energy prices. I'm not sure the thinking went quite as far as the reason why, but the reason is that as we came out of this 2007-8 mortgage securities collapse, the usual geniuses, the banksters, asked the question, well, what can we hawk up to the eyeballs this time? And so it's very significant that crude prices have collapsed, and I wouldn't expect more than a dead cat bounce here with the global economy weakening and with the very likely prospect of recession ahead. So it'll be tough sledding. You'll get some rallies in crude, short covering rallies, because even if crude's on its way down to $5 a barrel, there's always going to be counter trend moves. Nothing goes in a straight line.
Mm-hmm. Now we have Italy all locked down now. It's not just northern Italy. That means goods and services there won't be flowing. Will that kind of a situation show up elsewhere where entire countries are locked down because of the virus, or is that too hard to tell?
I think Italy is geographically positioned to have been in trouble there. It just kind of sticks out into the Mediterranean and says, come all ye, give me your tired, your poor, your huddled masses and all. And they have come to Italy in such quantities that their border control is a little bit tougher to keep the virus out. So I don't. This is the most optimistic way of looking at it, but I don't think we're all going to be going the same course as Italy. But of course, it's unpredictable at this point.
What other economic forces should we be looking at right now? Is gold going to be a secure place to be if the markets are unpredictable?
Well, gold is pretty weird. Over the last few times that we've talked, I would have been using a $1,731 an ounce for the April COMEX contract, and we made a spike, and then we made another that got within $27 of that number. We've come off again, and I still look at it as an unfulfilled target, but I'm not a gold $5,000 guy, and I'd be pretty careful if and when it gets to 1731. Shorter term, I have signs that silver is about to come down by $1 an ounce, and that would be pretty significant. But I think gold in the end will hold its purchasing power against any other investable class of assets that you can think of, and that's why you should always keep some of it around.
Are you surprised the price of silver hasn't gone up in step lock with gold?
It's kind of nutty, You've got a few things affecting silver's price, namely the historical relationship between silver and gold, the ratio. To some extent, one more than the other is perceived as a haven asset, but even there, I would say gold, if you had this idea that gold is a haven asset, you have been disabused of that notion over the last week or so. Because the other day when bonds, U.S. bonds, a true haven, were getting bought to the moon with some of the biggest rallies we've ever seen, one-day rallies, gold was kind of flat. So at least at the institutional level, the quote-unquote smart guys, they see no advantage at all to being in gold. And I guess that's a pretty decent reason for buying gold if none of these geniuses think it's worth anything. But on the other hand, it can be disappointing when you're watching the world fall apart and gold just doesn't seem to be doing much. So just take that as a sign, really, that gold is garbage. It's insignificant as far as institutional investors are concerned, even if the little guys kind of have the right idea.
Russia and China have been snapping up every piece of gold they've been able to lay their hands on over the last 7 years now. What do they know that nobody else knows then?
Yeah, and the cool thing is they don't make a big deal of it. They're just, China quietly encourages its people to accumulate gold. They're pretty, relative to the political constraints on Chinese, that economic one is it's not even there. I mean, China openly encourages Chinese to buy gold, and so it's not even a hoarding thing as it would be here. They're just, the mentality is it's always good to keep a little gold around, and Russia feels the same way. I think it sees the stupidity of the West in treating gold with abuse and scorn. Russia knows better, and even though it even though Russia isn't positioned to accumulate to mop up the supply of gold globally, it also offers no discouragement to Russians who want to buy gold, hoard it, trade it, do whatever. So they're just smart, and at some point, that gold, as I said earlier, the worst it's going to do is hold its purchasing power, and at a global level, it's probably going to do more than that, because even if the dollar doesn't collapse, a lot of other currencies will.
The UK and Canada have virtually sold off every piece of gold they ever had. I don't know how much gold the U.S. has. Does anybody know how much gold the U.S. has?
Right, that's true. The story is sort of back and forth on it over decades, is this idea that there's no actual gold in Fort Knox. Britain has been notorious as far as when they sometimes ostentatiously sell gold out of sovereign inventories, they make a big deal of it, and at times they made a big deal of it just when the price of gold was making some important low. So Britain is definitely a good. The UK is a good contrary indicator if you were looking to time your gold buying or selling, and not that they're ever going to be buying it in any quantity in some state of remorse. That's just not going to happen. The West, particularly UK, and to some extent the US, have definitely gone not just off the gold standard, but really off the gold standard in their minds, and that's why we've had all this controversy over this woman's appointment to the Federal Reserve Board.
Who is that, and what are the concerns?
I'm forgetting her name, but she was associated with gold in a way that may be, in the bankster's eyes, somewhat reprehensible. She thinks that gold has value, evidently, and that money pegged to gold is not a bad thing, and that's almost like saying that's kind of like when Joe Biden said he thought John Pence was not a bad guy. he was attacked for that. So this woman, merely to be someone whose past suggests that she hasn't relegated gold to the scrap heap, makes her kind of suspect. She's one of those hard money lunatics.
Rick, how would you sum up what's going on right now, and what kind of advice could you give people?
Well, I still like bonds. We've got a little room to the downside. My forecast for the long bond is 0.7% and 0.30 on the 10-year. So there's a little room to move. It's pretty late in the game, though. I can tell you that a friend of mine who manages high net worth accounts in Colorado has had a spectacular year in munis alone. They've had an enormous rally, and of course we're not really going for the yield when we're in some of these fixed incomes. We're going for the capital gain that occurs because the prices of these vehicles are so highly leveraged to fluctuations in shorter term rates. So there's been an enormous move in bonds, and the capital gains that have been made over the last perhaps 18 months are on the order of 20% and higher, and I think maybe with respect to munis, maybe 25% or higher. So I think there's still a little bit more of that left, but broadly speaking, you just want to put your money in the things that are horrible right now, that show no promise to yield anything, because you don't want to be on the same side as the money men here.
Rick, thank you so much for chatting with us.
Well, thank you for inviting me on, Jim. It's always a pleasure.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. If you have any questions for Rick or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter at House Street. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of House Street Media Incorporated.